So the rise in commodities is creating factors on this side of the ledger that the Fed has to defend, so they can't taper. So it's an interesting set of dominoes. And gold, we think, is one of the prime beneficiaries of this set of dominoes, and silver even more so. In fact, we've got a chart of silver and gold ratio we recently that is very pregnant with the indication that silver could vastly outperform gold. Technically speaking, silver has been a vast underperformer to gold since 2011 peak. So when silver hit $50 again, back in 1980 peak was $50. It hit there in 2011, turned down.
Right.
And it underperformed gold through about 2018, 2020. In other words, as gold was going up, silver tried to go up too, but wasn't keeping the pace that gold did. Gold doubled from late 2015 low to the high last summer. Silver finally engaged relative to gold, we're talking, not just net price. It broke out on a spread basis, and you measure what percent is silver price in relation to gold price. And that spread chart broke out clearly last summer, the same point when silver itself exploded. Silver was trading in the teens, and suddenly it was almost $30 in a matter of 3 weeks. During that time, that spread, silver relative to gold, had broken out technically. Since then, as the process has occurred where gold is corrected, it's more or less gone sideways in a broad range. That spread has not broken back down. It's gone sideways. So it's still positive for silver. There's another structure, though, on the spread chart. We bumped in 2016, and there was a certain relation to about 1.5%. What the price of silver was in relation to gold, and that rally that occurred in 2016, that first major rally off the bear low. Then the rally we've recently seen, the spread again peaked around 1.5%. Price of silver versus the price of gold. Right now, it's just below 1.4%. We argue if you ever get a monthly close, the spread, in price of silver versus gold, it's much higher, it's credibly higher than 1.5%. Like, in fact, our specific number is 1.53%.
Okay.
You ever get a monthly close with the price of silver at 1.53% of gold, it blows through an entire range of spread readings going all the way back 6-7 years. We think at that point, a similar behavior, by the way, on that relationship of silver to gold occurred back in 1979 during that 1980 bull market in commodity. It also occurred in the run-up to the 2011 peak in silver. And at the point where that spread broke out, at that point, both gold and silver engaged in a much speedier upside, which whatever their pace had been, they suddenly accelerated. And in fact, both of the surges, those surges in the spread and also in the net price of both metals, peaked in about 6 or 9 months after that spread breakout. But what happened in that 6 to 9 months after the spread broke out was ballistic. Now, when you go back and look at the 1980 in silver and gold, the silver ratio to gold was 6%. Price of silver expressed as a percent of the price of gold. Sure. In the 2011 peak, it was 3%, over 3%. Well, that's a big move. When you've got a metal that's at 1.5%, it goes to 3%. That's a doubling, not just a 1.5% move. It's a doubling in its relative strength to gold. And that's just getting back to where the spread was in 2011. If you ever go back to where it was in 1980, it's 6%. Sort of be off the page. Even if gold did nothing, you do 6% of $2,000 gold or something, you get a big number.
Well, so, what do you expect that to be? Like 80 to 100, maybe?
Oh, no, we're thinking more like 200. We think, first of all, the gold market, even in its prior bull markets last 50 years, if you go back and trace where the bear market low was prior to each of the bull markets, 1975 bull market when gold was legalized, it had already been in a bull trend for several years, the 1980 peak, the 2011 peak, et cetera. They were all like 8-fold moves measured from the price low that gold had before that bull markets. Well, what was our recent low? 1046 in November, December of 2015. Well, 8 times that's $8,000. That's just a normal ratio bull market for the prior 3 bull markets. That's not anything exceptional. We think it could be more than that. Well, even if you just went to $8,000 gold and had another 8-fold move, like the prior 3 bull markets.
So you think $8,000 in gold is quite realistic?
I think it's realistic. In fact, it's just a replica of the 3 prior bull markets. And I think we're actually in harsher times, such that we could go more ballistic. We might even see the end of fiat currencies.
So if gold reaches 8,000, what would your price target be on silver?
Well, I mean, you do 3% of that. That would be silver replicating its relative performance peak of 2011, or 6% of that would be replicating its relative performance peak of 1980. It's off the page. So
what's off the page to you? Which are 200 or
I don't know. I think that what Bitcoin did last summer through the spring, which went from like 6,000 to 65,000. Okay? It did it in 9 months. Okay. Now that stunned everybody. I wouldn't be shocked if silver did something.
Wow.
If silver becomes the next Bitcoin type market. It's the poor man's gold. And even a lot of the Bitcoin folks, they're recognizing that. They've gotten around the silver concept. And I think it's legit. Technically speaking, fundamentally speaking, I think their concept is correct. And they've learned something. That Bitcoin has been a heck of a lesson. It's taught a philosophical to people without giving them a lecture. And that is that, hey, we don't like fiat currency. What do we need them for? They just inflate and get worthless and more worthless year by year. Bitcoin can't do that. It's not.
The Bitcoin community really has promoted the idea of sound money in some way. Whether you believe Bitcoin is sound money in and of itself is a story, but they have certainly...
It's certainly sounder than fiat currency because it has a theoretical limit to expansion rate. And most of the cryptos, that's the case. So they're competing now with government-controlled money. And the concept is hit the whole new generation globally. The young 20 and 30-year-olds who are investing suddenly have shrugged the idea of we don't need government. Well, if you got that concept, suddenly you don't need a lot of things in government once you've crossed that line. So we think there's a lot of stuff going on here, not just markets, but fundamental concepts that is going to shake the world. And ultimately, though it may be violent in the markets and not good for some people during the process, the ultimate end is going to be very Darwinian, very good. We'll have evolved to a better state because a lot of bad ideas will be rejected, much like this generation rejecting fiat currency. We'll have stable money again. I suspect you're going to have some governments, quite possibly the Chinese or the Russians first, having a gold-backed currency. Finally, maybe the West will get the idea again. It's been 50 years of this since Nixon took us off gold on international exchange for the dollar, where we went totally fiat.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.